All right, it's about 11:03. Thanks everybody for your patience. As I said, I'm Alfred Sanchez. I'm the president and CEO of the Greater Miami Chamber of Commerce, and I want to welcome you to today's webinar and workshop on how to maximize your PPP loan and prepare for the forgiveness portion of that, which is actually very important to all of us. The CARES Act was a swift government reaction to the economic fallout caused by COVID-19, and the Chamber saw that the small businesses needed help in applying for those government aid programs as the normal online and in-person structures struggled to respond to the weight of this enormous demand. So we opened up GMCC Cares, an online help desk and call center, to offer direct services and personal assistance to those who are looking to sort of go through the whole PPP application process. I'm going to ask the staff to put a link to that GMCC Cares program because we're still operating, and those of you who are looking to continue to apply or to apply for forgiveness and need help, you can go into that chat, into that website to get help. We've also partnered with CareerSource South Florida to disseminate grants between $5,000 and $10,000 to small businesses through what we're calling the Layoff Aversion Fund. These are grants, not loans, that are offered to basically offset and reimburse the expenses that you may have incurred trying to sort of pivot and respond to the crisis and keep your staff and keep your business open. Now, to qualify for this grant, you have to be a small business in operation for the last 2 years. You have to have more than 3 staff and fewer than 50. You have to operate within Miami-Dade County or Monroe, and the grants must be used for qualifying expenses that you have already incurred. So you have to have receipts to prove that. There are required documents, 2 years of tax returns, 941, RT6, W9s. It's all there, but you do have to be prepared to upload those forms. If you're interested in applying, go to the layoff aversion page on our website, and I'm going to ask the staff to please drop that into the chat as well so that you can have that and go directly to that. This is an incredible program offered by CareerSource South Florida of grants between $5,000 and $10,000, and all the qualifying information will be there. Okay. Well, we have an incredible program for you today. Let me go through some of the overview of, we're going to go over some of the sort of overview of the PPP program itself. We're going to look at the changes in the PPP that will help our borrowers. And we're also going to go through the forgiveness part of the PPP. So this is extremely valuable information. We're going to have some hands-on walking through of some of the forms, and I think it'll be valuable to all of us. Before we do that, I want to go through some of the ground rules because I want to make this meeting as efficient as possible for all of us. You'll notice that your microphone is muted and it'll remain so throughout the presentation. You're going to see that the chat box is open there. Please use that to communicate with one another, share information that you have, and also ask clarifying questions if something's not clear in the presentation. However, you're also going to get a chance to ask directly questions to our panelists. And if you want to do that, there's a Q&A feature. Use that. It's the only way that we'll know you want to ask the panelists a question. So please make sure you write your questions in the Q&A, or we're not going to be able to send them up to our panelists. Now, the webinar is being recorded, and we're going to be able to make that available to all of you on the Chamber website just later on today. So if you missed something or you wish you could review something, it'll be there for you later on. Now, it's my pleasure to introduce our distinguished panel. We have Victoria Guerrero, who is the District Director of the SBA in South Florida. She's got 20 years of experience leading and managing, transforming both private sector corporations and public sector entities. She oversees the delivery of SBA programs such as financial assistance, management counseling, and business development throughout 24 South Florida counties. That's a huge area. And hats off to her because she's doing a fantastic job. We also have Maggie Reach. She's a tax manager and member of the PPP Loan Advisory Team at MBAF, a great member of the Chamber. She has been in public accounting since 2011, and Maggie provides tax compliance and planning services to domestic and international clients, including C corporations, partnerships, and foreign corporations. She also provides counseling services as they relate to the PPP application program and loan forgiveness portion. So she's extremely valuable to us, and we're very glad to welcome her here today with us. And lastly, but not least, let me introduce our friend and the CFO of the Greater Miami Chamber of Commerce, Mary Lou Rios, who has been a career CPA at Pricewaterhouse. She was a CFO of an architectural firm. She has been the head of Miami Marsh Private Client Services Division, and she's founded several startups herself. She's got quite a list of experience. She's been a longtime Chamber member, and we're very glad that she's on our staff and here to help you. She's become an expert herself. So that's our panel. Let me turn it over to our first speaker, Victoria, who's a great friend. Victoria, the floor is yours.
Thank you so much, Alfred. I appreciate it. And first and foremost, I want to say thank you for inviting us to this wonderful webinar. And thank you for all you do to help our small business community, especially throughout this, pandemic that we've all been experiencing. So I appreciate that very much. And thank you for that. So let's kick it off. Before I start, I also want to mention that I have my Deputy District Director here with us today, Ms. Janelle Hine. Right now you don't see her on video, but she will be on video shortly. And she's going to be assisting us later on with our Q&As. The reason being is that I might not be here for the Q&As. I've been asked by the White House and our SBA headquartered agency to participate in another event that they're having. So I might have to drop before the end of our webinar, and I apologize for that. But Janelle is my Deputy District Director. She's been with the agency for 29 years. She knows all of our programs. She's one of our subject matter experts in disaster and in all of these PPP programs and EIDL programs that we have. So you will be in great hands with her. So Janelle, thank you so much for doing this. I do appreciate it. So let's kick it off. I'm going to share my screen, if you allow me a moment, and we're going to do a brief overview of the loan forgiveness process, what's changed, where you can go to find the application. And I'm going to kind of take you through that journey. If you can just bear with me 1 second while I share my screen. And I believe you should be seeing the screen right now. Okay, so let's kick it off. So for today's agenda, we're going to talk about roles and responsibilities, the glossary of terms. It's very important to understand a lot of the terms and vocabularies that are used in the application in order to go through the application. And these are payroll costs, full-time equivalents, non-payroll costs. We're going to talk about the loan application itself, and we're going to talk about documents required and maintained, and things that are just good for you to know. So I know at some point in this process, you've all felt these emotions, right? We've gone it through, we've gone it through it ourselves. There's been a lot of changes, a lot of challenges, just to apply for the PPP and now to apply for the loan forgiveness. So our goal today is to get you from this state of mind to this state of mind. We want you to feel confident. We want you to get that loan forgiveness. We want you to be able to understand the process, and we want to be able to answer all your questions that you have. How are we going to do this? We're going to find the simplest way to kind of cut through all this confusion, through all the rules and regulations, and just provide to you the need to know basics for you to be able to find the application and apply for your loan forgiveness. Again, in my world, at least, I like to believe that keeping things simple is a beautiful thing. So we're going to try to do that for you today. So what are roles and responsibilities? The role of the borrower, this would be yourself, you need to learn about the PPP loan forgiveness guidance. And congratulations, you're on your way there because you're on this webinar. It'll be great for you to learn about your lender's internal processes. We've been told a lot of lenders are going to create an electronic portal where you can go straight to their website and apply directly. So you need to contact your lender and see if they're going to be doing this. Today we're going to go through the application that we have on the SBA site. You can definitely use that as the application or as the guidance to prepare all your documents and get everything ready. So once your lender has that electronic portal open, it's just a matter of you submitting all the information in their electronic portal. Part of the process is you'll be asked to certify the accuracy of the information that you're providing to the lender. Now, what is the role of the lender? The lender will be reviewing the application and confirming that the borrower's calculations are correct, and it renders a decision regarding the loan forgiveness. They have 60 days to do this, and they submit that information to the SBA. SBA will have 90 days to let the lender know, yes, we agree with you, they are eligible for forgiveness. And then it's the lender's responsibility to notify the borrower of the outcome. So SBA's role, again, reviews the lender's submission and their recommendation for forgiveness. They're also going to deduct the idle advance amounts from your forgiveness. So remember, if you received PPP funds and you received an idle advance, that whatever you receive from the idle advance is going to be deducted from the PPP forgiveness portion of it. Why? Because they're both monies that you don't have to essentially pay back. So the government doesn't want you double dipping, and that's why they do that. SBA's role will be to do that. And we also want to confirm that the borrower eligibility for loan forgiveness is accurate. And remember, SBA, being the federal government, we always reserve the right to hold audits. So let's go quickly through our glossary of terms. These are the terms we're going to look at. Eligible payroll costs. What does it mean, paid versus incurred? Covered payroll costs, alternate covered payroll cost, full-time equivalent, safe harbor, salary or wage reduction. That's all within the payroll bucket. The eligible non-payroll costs is basically your business expenses. So we're going to talk about what are those eligible forgivable business expenses and what does it mean versus paid versus incurred. So let's begin with the payroll cost portion of it. If you're a small business, when we talk about payroll costs, we're talking about salaries, wages, commission, payments to furloughed employees, any bonuses, hazard pay, benefits, that includes vacation, parental family leave, medical leave, health coverages, including insurance premiums and retirement. All that is included when we talk about payroll cost. Also, allowance for separations. This is mostly known as severance packages, and any payment of state and local taxes. So all of that constitutes payroll cost. Now, that's for small businesses. If you're an independent contractor, a sole proprietor, or self-employed, it's a lot simpler. So these basically are your wages, your commissions, your income, your net earnings from self-employment. All of that constitutes payroll costs if you're one of these business entities. So just remember, you cannot exceed the annual salary of $100,000 as prorated for the covered period. If you remembered when you applied for the PPP loan, there was a section there that if it says if anybody in your company makes over 100,000, you have to bring them down to 100,000. We just wanted to remind you of this as well, so you can stick to the same rules. Very important. You need to decide if you're going to go under the covered payroll period or the alternative covered payroll period. So for the covered payroll period, that means your pay period begins on the day you received your funds, and then you count that 24 weeks moving forward or 8 weeks moving forward. Just remember now the rule changed. It used to be for 8 weeks. Now you can do it for 24 weeks if you like. But your covered payroll period, when we refer to that, means you got your funds on the same day that your pay period starts. So you're going to use it that very same day. That means you're going to go under covered payroll period. Alternative covered payroll period, or payroll covered period, that means that your funds was received in the middle of your payroll cycle. So you need to wait until your next payroll cycle begins in order to start using those funds. And then you can start counting your weeks moving forward. So if you fall under that category, you want to utilize your alternative payroll covered period when you're filling out the application. So your first step is to decide which category you fall under. Why? Because you must be consistent throughout the application. You can't go back and forth. So Step one, decide which payroll period you're going to be utilizing. What do we mean paid versus incurred? When something is paid, it refers to the action of making the payment. So if you're paying your employees, that means you're writing out the check or the money is being deposited into their deposit, into the direct deposit to their bank. If you're paying a utility bill, that means you're writing out the check or you're sending that money to that utility. Incurred means that refers to the action of when it occurred. So you as a business owner incurred the expense of your employee on the day that they worked for you. You as a business owner, you incurred the expense of the light bill on the day that you utilized the light. So that's the difference between paid and incurred. Now, very important, you cannot reimburse yourself for past payments to employees that you've already paid. Because the employees earned the wages when they worked. So they was incurred in the past. So you cannot use the funds for that. But if you owe payments to your utilities or your mortgage insurance or rent or lease and they're delinquent, they were in the past and you never paid them, you can use the funds, the PPP funds to pay for them, even if that was in the past. You just can't reimburse yourself. So, keep that in mind. So let's talk about employee salary or wage reduction. This is very important. If you reduced your employee salary or wages by more than 25% during the time frame of January 1st of this year to March 31st of this year, there will be a reduction in your loan forgiveness amount. And let me give you an example of this. If an employee makes $1,000 a week normally for 40-hour worked during that reference period, and then you have to reduce that by $300. So now the employee is making $700 a week for 40 hours during the covered period. The reduction is $300 per week or 30%. So the first 25% does not get affected. The reduction doesn't reduce the forgiveness. So $250, which is the first 25%, will not be affected in the forgiveness. The loan reduction would be the extra $50 that is left over to make the $300 times 8 weeks or $400, and that's the amount that will be reduced from your loan forgiveness if you're using an 8-week covered period. If you're using your funds for 24 weeks, then you get that same $50, you multiply it for 24 weeks, and then your loan forgiveness will be reduced by $1,200. So that's basically how the reduction works. So this is just one example, and I'm sure we're going to do a little bit of a deeper dive with Margaret a little bit later. So let's talk about FTEs, full-time reduction safe harbor. What does that mean? FTE is basically headcount. Is how many individual people, not their names, but how many bodies you have on your payroll. You will be exempt from the reduction in loan forgiveness if you reduced your FTE, your count of employees, from February 25th to April 26th, and then restored it by December 31st of this year. Then your loan forgiveness is not going to be affected. So if you had employees that left and you brought them back, or if they didn't want to come back and you hired other people, you're going to be fine. Your loan forgiveness will not be affected. There's another example here. You can document that you were unable to operate between February 15th and the end of your covered period. Remember, the end of the covered period is the end of the 24-week or the end of the 8-week period, at the same business activity level as before February 15th due to compliance with requirements established or guidance listed on forgiveness application. So basically that means, remember, we had CDC saying everybody needs to stay home. There's only 20% of people that can be in a restaurant. If you were affected by those guidelines and your business activity level dropped, and because of that, you had to let go of some of your employees or what have you, you're not going to be affected. You're going to be okay. Your reduction in loan forgiveness is not going to be affected if you fall within those guidelines. So did you know your loan forgiveness will not be reduced or effective, taking a deeper dive here, if you made a good faith written offer to rehire your employees? during your covered period or alternative covered period, which was rejected by the employee, and you were unable to hire similarly qualified employees for those vacancies before December 31st. So let's just break this down. If you have an employee who left, you have to have it in writing. You emailed them and you said, I would like to offer you your position back. And they emailed you back saying, no, thank you, I'm already working, or I'm on unemployment benefits, I do not wish to come back. You hold that email, because that means you did a good faith effort in trying to get that person back. In addition, if you are unable to find a qualified employee to fill that vacancy on or before December 31st, you're going to be okay. Your loan reduction is not going to be affected. Other situations where your loan reduction will not be affected is if you had employees who were fired for cause, they voluntarily resigned, or voluntarily requested and received a reduction of their hours. Now let's talk about non-payroll cost. And for non-payroll costs, it falls under mortgage interest payments, rent lease payments, and utility payments. So remember, mortgage interest payments, rent lease means you can actually, if you lease a copier, you can use the money to pay for that lease. If you have a rent for your building, you can use it for that. And utility payments for electricity, gas, water, transportation, phone, or internet. So the above is true as long as it was established. That means you already had these payments before February 15th of this year. It was paid or incurred during the cover period and paid by the next regular billing date, even if the billing date is after the covered period. It's eligible non-payroll costs. Remember, it cannot exceed 40% of the total forgiveness amount. So the total PPP funds that you have up to 40% to utilize for these type of costs. There's no advance payments or interest on covered mortgages or obligations, so you cannot utilize that. So congratulations, now you know these terms. And I'll just pause here so you can take a picture, and we'll go to the next one. You also are familiar with these terms as well: FTE, safe harbor, non-payroll costs, paid non-payroll costs, and incurred non-payroll costs. These are some terms we did not discuss, but you can take a picture if you like and refer to them when you're doing your application. And here's some other terms we did not discuss, but you can take a picture of it if you would like to refer to them during the application. Now let's go to the loan forgiveness application overview. Here, all you need to do is go to sba.gov/disaster. And let me know if you still see my screen. Okay, I'm assuming you still see my screen. So if you go to sba.gov/disaster, it's going to take you to this page. I want you to go to funding programs and go to coronavirus relief option. And if you go on there, you want to scroll all the way down and go to PPP protection. Click on there, and you want to continue to scroll all the way down. So here's a there's great tools in this page. If you need help with your application, you need somebody to hold your hand and help you apply everything, review all your paperwork, click here on find a lender. If you need to find a lender to apply, you click here to find a lender, you put in your zip code, and it's going to give you a list of lenders that are still accepting applications. There's another one here further down that if you need help in completing, oh, is it on here? No, is it on here? One second. No, it's not on here. Okay, because there's a link here that you can go, and I'll give you a link at the end of the presentation, that you can get our resource partners, and our resource partners can sit with you one-on-one to help you with your loan application. So if you go into this page, you go to loan details and forgiveness, you scroll down, and you want to go here. So there's two versions of our application. One is our regular application. You can have it in English and you can have it in Spanish. Here's the link for Spanish, and these are the instructions. And another one is our easy application, and you have the instructions in here. Now for this particular application, it's a little bit lengthier, and I'm going to show you the difference between one and the other. In this application, the first part is going to be very familiar because it's going to ask you a lot of the questions they may have asked you when you initially applied for the PPP loan. But as you can see, it's going to ask you for payroll and non-payroll cost. It's line by line, and the instructions, the other link that I showed you, is also line by line. So when you're filling this out, print out the instructions at the same time so you can guide yourself when you're filling out this application. And here you're just attesting that all of these items are true. And at the end, all you would need to do is sign and date it. This is the Schedule A worksheet that I believe we're going to go and take a deeper dive on a little bit later. You'll need to complete this in order to fulfill the application. And this is your worksheet that you're also going to need to complete to fulfill the application. I always recommend people to utilize the worksheet first, and then the information from here, you're going to have to pull it into the Schedule A form because it's going to ask you. And then the information from the Schedule A form, you will pull it to the application. So when you go and apply, you want to work it from the bottom up.
We can't see your screen. Can you reshare? Once you went to, yeah, just reshare, please.
Okay. Okay. Let me know if you can see the screen.
Yes, we're seeing the application now. Thank you.
Great. So this is the application I was speaking of. The first portion is the application. This is our regular application. The second portion is the Schedule A form. This is a Schedule A form. And the third portion is this worksheet. And what I was saying is I recommend for folks to do the worksheet first because the numbers that you're going to create there, you're going to pull it into the Schedule A form. And the Schedule A form numbers, you're going to pull it into the application. And we're going to do a little bit of a deeper dive later with our next speaker where she's going to actually walk you through some of these processes to make it simpler for you. But this is one application that I wanted to share with you. The easy application, remember there's one called an easy application. The easy application is right here. And the easy application you want to use if you're self-employed and do not have any employees. This is the easiest application for you to utilize. You also want to use this if you did not reduce your employee hours or salary by more than 25%, or if you experience a reduction in business activity because of the COVID-19 and did not reduce salary or wages by more than 25%. So if you fall into any of these categories, you want to use this easy form because it's just a lot easier to fill out. So again, you would just go through the process and you would certify, and that's basically it. It's a three-page form. So this is all I wanted to show you right now on this application. Remember, you can find this on sba.gov/disaster. And go to funding opportunities, and then from funding and opportunities, go to PPP, and you're going to find all this information on there. Now I'm just going to stop sharing real quick, and then I'm going to share again to finish up my PowerPoint. I just have one more section, and then I will hand it off to our next speaker. So you should be seeing my PowerPoint again. We just went through the application, documents that are required and maintained. All borrowers will need to submit the following with your loan forgiveness application. Basically, your 2019 filed taxes. If you're a small business, these taxes should include your payroll reports. If you're a sole proprietor, self-employed, it's already going to include your 1040 Schedule C. And if you're an independent contractor, it will already include your 1099 miscellaneous form. You also want to provide proof that you were in operation as of February 15, 2020. And you can do that by showing payroll reports, or if you don't have that, bank statements should suffice. If you use the funds for non-payroll costs, you will need to submit verification that you paid those items from February 20th and the months of the covered period. So again, if you paid your mortgage interest, you want to use canceled checks or your account statements verifying that you made the payment. For rent or lease options, the same thing. You want to do a current lease agreement or receipts or canceled checks. That shows that you made the payments. And for utility payments, you want to use copy of your invoices, receipts, or canceled checks, or account statements verifying that those were made. Documents that you should be maintaining is for up to 6 years is the PPP Schedule A Worksheet or its equivalent, and any documentation supporting the listing of each employee in the worksheet schedule. documentation regarding any job offers or refusals by any employees, and documentation supporting the Schedule A Worksheet, which is also called the FTE Reduction Safe Harbor. Things that are good to know and remember: 60% of your PPP loan, a minimum of 60%, it can be used to fund payroll and employee benefits. The remaining 40% can be spent on mortgage interest payments, rent and lease payments. If you stick to these guidelines and you have all the proper documentation, your loan should be 100% forgiven. So your next steps is to complete your loan forgiveness application. Remember, the lender has 60 days from the receipt of the application to make a decision and notify SBA. SBA then has 90 days to review everything, make sure, and decide if they agree with the lender and make sure that everything is correct, and they would notify the lender, and it's the lender who will notify the borrower if and when their application is approved for forgiveness. If you want to take a picture here, these are some important contact information to have. You will find all this information on sba.gov. To find our resource partners so they can help you one-on-one, go to sba.gov/local assistance. Here's our ways that you can stay connected with my office. We have websites and we have webinars and virtual office hours throughout the week. You go to sba.gov/South Florida. While you're there, you'll see our calendar on the bottom, and you'll see a link on the bottom right where you can subscribe to our email distribution list, and we'll let you know whenever we have more information or more webinars for you. You can also follow us on Twitter, on YouTube, or you can email us directly at southflorida_do@sba.gov. So thank you so much. I try to make it as brief as possible, but still share enough content that everyone will have a brief overview of what the forgiveness process is going to look like, what the new changes have been, and where they can go to get those applications. Thank you so much.
So Margaret would like to now present her presentation. Margaret is from MBAF, and she is going to share some more insights, and then we'll take some questions. Thank you.
Thank you, Marilu. And thank you, Victoria, and thank you everyone for having me and having us. I hope everyone is well and safe during this time. So Victoria went over a general overview, and now I'm going to go a little deeper dive into the application. I'm going to walk through it and kind of give you some next steps. So let me share my screen with you. And I've been monitoring the Q&A, and everyone has been doing a great job answering the questions. I have a colleague with me, Lisandra Silva. She's been assisting with the Q&As as well. Let me get the screen set up. Okay. So let's go through some of the details of the loan forgiveness application. As Victoria mentioned, there's two applications. There's a form 3508 regular long form, and there's a 3508 EZ. So the long form looks just like it did before in the initial version. This most current version was released on June 16th. When you're looking at it, when you're filling it out, you got to look at it, through a lens. This is the first lens of the application. You have to fill out the business, your legal name, the business address. This should match the exact same legal name and address as the initial application to receive the funding, as well as your loan number, the date you received your loan, the loan amount, the employees at the time of the loan application versus the employees at the time the loan forgiveness application is submitted. This is important for the safe harbors that Victoria mentioned, as well as putting on here the EIDL advance amount, because that is going to be reduced from your loan forgiveness amount. And in the red boxes here, we have those key items that Victoria was mentioning. You have your covered period, which starts on the date of loan funding. For the 8-week period, it's plus 55 days because you're including the date of the loan funding. And then for the 24 weeks, it's plus 167 days. And as she mentioned, the alternative payroll covered period is available if you are a frequent payroll, if you pay your payroll frequently, so either weekly or biweekly. So choose the alternative payroll covered period, which she mentioned, which is if your date of loan funding is in the middle of one of your payroll cycles, you use the first day of the next payroll cycle, if you're a weekly or bi-weekly payer. And then, you know, there's this checkbox right here, as Victoria mentioned, every single PPP loan is subject to SBA review, especially for loans in excess of $2 million. So this part of the application is the next section underneath the informational. And this has stayed the same from the first version of the application, but with the Paycheck Protection Flexibility Act, we know that the payroll cost requirement is 60% and not 75%. So that was actually the only change on this section of that application. And then looking through the lens again, so the first scope of the lens is the application. The next is the Schedule A, which the application feeds from. The Schedule A here, you have the cash compensation for what they call Table 1 and Table 2 of the following lens, the next lens, which is actually the Schedule A worksheet. So here's the Schedule A worksheet. You can see these two different boxes. The first one is Table 1, and I'm actually going to go into the second slide, but I just kind of want to show you the landscape of this worksheet, how we have Box 1, we have a Box 2, and a Box 3 in Table 1, and then in Table 2, you can see we have a Box 4 and a Box 5. So if you pull back the lens, right, you populate Schedule A worksheet, you get an amount on Box 1, 2, 3, 4, and 5. You go back to Schedule A and you populate it. You can see that line 1 is from Box 1 of Schedule A worksheet, line 2 is from Box 2. And that's typically how this application works. You start with the framework, which is the application, and then you zoom into the different worksheets. So let's go into some of the details of the easy application. As Victoria mentioned, this is provided to applicants who are either self-employed, independent contractors, or sole proprietors, or who had no salary, hourly wage reduction, or FTE reduction. If you did have an FTE reduction and you fell into one of the safe harbors that Victoria mentioned, then you can use this form. So this is a checklist that is front and glaring on the first page of the easy application. And if you can check one of these boxes, you could do this form. And the easy application doesn't have the multi-lens tiered, structure. It's just one application. So you just complete the payroll cost, your non-payroll costs, and you populate with your loan amount, and you take the lesser of 60% of payroll costs or the PPP loan amount. And that's it. That's the easy application. One thing I do want to note on the easy application is that even if you have a small loan amount less than $2 million, you can, or a loan amount greater than $2 million, you can use this application. The only checklist items are these three. Okay, so let's dive into some of the payroll costs. So for Table 1, which I mentioned, which is Schedule A worksheet, this is not the easy application, this is the long form. For Table 1, you fill this out with each employee detail, each employee's payroll costs if they were employed at any time during the covered period or alternative covered period, and whose principal place of residence is in the United States. Also, you populate Table 1 with an employee who received less than $100,000 of annualized wages for all pay periods in 2019, or who were not employed by the borrower at any point in 2019. So in other words, if you have an employee that makes over $100,000 in wages and they were not employed in 2019, but they were employed in the covered period, you include them in Table 1, regardless of their annualized salary. So Table 1, like I said, is broken down into three boxes. The first is the cash compensation, which is payroll costs. The second is the FTE average, which I'm going to go into next. And the third is the salary hourly wage reduction. So Table 2 in the Schedule A worksheet is for employees who were employed during any point in the covered period and whose principal place of residence is the United States. and who received an annualized rate of more than $100,000 for any pay period in 2019. So let's say they received a bonus in December that brought them over $100,000. They're included in Table 2 and not in Table 1. And if you're in Table 2, the salary hourly wage reduction does not apply. So like Victoria mentioned, if you make over $100,000 in salary in 2019, you do not have a salary hourly wage reduction. And similar to Table 1, cash compensation is populates in box 4 and the FTE average in box 5. So let's look into how to calculate what goes into box 1 and box 4 for Table 1 and Table 2. Gross salary, wages, commission, or bonuses, similar compensation, just like Victoria mentioned. Payment of cash, tip, or equivalent, these are payroll costs. Payment for vacation, parental, family, medical leave, or a separation allowance, severance pay. Compensation does not include any compensation over $100,000 during the covered period. So Table 1, Box 1, for the 8-week cannot be over $15,385, and it cannot be over $46,154 for Table 1 or 2 in Box 1 or 4. Next, compensation does not include compensation of of an employee whose principal residence is outside of the United States, and it does not include parental, family, medical, sick leave, which was already credited under Section 7001 or 7003 of the Families First Coronavirus Response Act. Let's go to the FTE average. So the FTE average is based on headcount. It calculates the average full-time equivalency per employee during the covered period. According to the SBA, a full-time equivalent employee is someone working at least 40 hours per week. So the maximum you can have for one employee is 1.0. To calculate the FTE, like I said, you take their total hours, an employee's total hours, and divide it by 40 to get the FTE average. This can be burdensome for some borrowers. So the SBA has offered what we call the simplified method. So if anyone works more than 40 hours, you assign them a 1, and anyone working less than 40 hours, you assign them a 0.5. Because to calculate over 100 employees, for example, the FTE average takes time. So the simplified method must be used during the whole forgiveness application. You can't pick and choose if you use the regular calculation of actual hours over 40 or simplified method. So as Victoria mentioned, the salary hourly wage reduction applies if anyone in 2019 that earned less than $100,000 their wages were cut by more than 25% as compared to the first quarter of 2020, the salary hourly wage reduction applies. And there's a safe harbor that I'm going to discuss next. So let's go into the loan reduction exceptions and safe harbors. So for the salary hourly wage reduction safe harbor, meaning no salary hourly wage reduction will apply if the average annual pay between February 15th and April 26th is greater than the average annual pay as of February 15th and the average annual pay as of the early of December 31st and the date the application is submitted is greater than the pay in February 15th. So in other words, you need to reinstate their wages back to the level it was as of February 15th to have the salary and wage reduction safe harbor apply. So you can cut the wages, but if by the time you apply for loan forgiveness, you reinstate them, there's no salary hourly wage reduction. So now there's an FTE reduction exception, and that's what Victoria was referring to earlier. If you offered to rehire an employee who was an employee on February 15th, and you were not, and you tried your hardest, you were unable to hire someone similarly qualified before December 31st, that person will not hurt your FTE, your loan forgiveness. So there's three. Another exception is if you made a good faith written offer to rehire an employee during the covered period, meaning they were not employed before you received the loan funding, and then you offered to make them an employee during the covered period, and then they subsequently rejected that offer, they will not impact your loan forgiveness. And another exception is if during the covered period someone was employed and they were fired for cause, or they voluntarily resigned, or they voluntarily requested a reduction of hours, they will not impede your loan forgiveness. So those are the exceptions to the FTE reduction. There's also two safe harbors. The first safe harbor, which Victoria mentioned, which was new with the Paycheck Protection Flexibility Act that was signed into law June 5th, is if your business is unable to operate between February 15th and the end of the covered period at the same level it was before February 15th because of the guidance provided by the CDC and the Secretary of Health and Human Services for COVID, so such as social distancing, wearing masks, closing the doors for cleaning, et cetera. If you cannot maintain the business activity that you had before February 15th, then you have no FTE reduction whatsoever. Another FTE safe reduction harbor, because there are many, is number two. And number two is if you reduce your FTE employees in the period beginning February 15th and ending April 26th, but then you restore them to what they were at February 15th by either the date you submitted the loan application or December 31st, 2020, you will not have an FTE reduction. Now let's look at non-cash compensation. Non-cash compensation on Schedule A, Line 6, is healthcare expenses. What does that include? It includes employer contributions for employee health insurance, employer contributions for self-insured health plan, and employer-sponsored group health plan. It excludes any pre-tax or after-tax contributions by employees, so it's just the employer contribution portion. One thing to note on Line 6 is that you do not include the health insurance contributions made on behalf of a self-employed individual, a general partner, or an owner-employee of an S corporation or C corporation. Those are going to be included on a separate line of the PPP application. So Line 6 is just non-cash compensation for health care expenses for employees that are not owners. The next line on Schedule A, the next lines are Lines 7 and 8. Line 7 is retirement contributions. So that's employer contributions to employee retirement plan. It excludes pre-tax or after-tax contributions. One thing to note here as well is that you are not to include the employer portion of the retirement contributions made on behalf of self-employed individuals or general partners. But you can include contributions of owner employees, but they're capped at a prorated amount that they were in 2019. So basically, and there's a typo here, so it should be employer retirement contributions. But if you are an owner employee and in 2019 you received an employer contribution of $100,000 to your retirement plan, you include the prorated amount from your covered period of that amount here, the minimum. So you can't go over what 2019 was. And then lastly on Line 8 is state unemployment taxes and other state employer payroll taxes. So this is SUTA, Florida has SUTA, and it excludes any taxes withheld from an employee earnings. Line 8 includes owners as well. It's only Line 6 and Line 7 that have special rules regarding self-employed, general partners, or owner employees. So let's go to compensation to owners. So compensation to owners is presented on a separate line, and it's limited to $15,385 for the 8-week period or $20,833 for the 24-week period, but it is subject to the lesser of 2019 compensation. The amount on line 9 should never be included on Table 1 or Table 2. Table 1 or Table 2 are reserved solely for employees of the company, not for the owners. So let's look at some of the non-payroll costs. The first non-payroll cost, mortgage interest payments. So these are business mortgage interest payments made during the covered period. You cannot include prepayments of mortgage interest payments. And these are must be paid or incurred. Rent payments for real personal property. Utility payments, so that's telephone, FPL, water, electricity, gas, petroleum gas, etc. So they must be paid during the cover period or incurred during the cover period and paid on or before the next regular billing date. So here's some of that required documentation that Victoria was alluding to. Payroll documentation, you absolutely need to submit this with your loan application, bank statements, third-party payroll service provider reports. We know that ADP and Paychex has customized reports just for the PPP loan forgiveness application. Typically, you need to provide your payroll tax filing, so the Form 941, and also state quarterly business filings. The FTE documentation, you need to show the average number of FTEs that you had in all these different time periods. These are crucial for the calculation, so you need to document and show how you calculated them. So non-payroll documentation, typically for the rent documentation, we recommend having a current lease agreement, a copy of a current lease agreement, including receipts and canceled checks, business utility payments, the invoices, canceled checks and statements, business mortgage statements from your lender, canceled checks, all these things to verify the existence of these obligations prior to February 15th. So this one is important as well. You have to maintain this list of documentation, but it's not required to be submitted. Documentation supporting the individual employee in the salary, hourly, wage reduction. Documentation supporting each individual that received compensation in 2019, and if it was more than 100,000 or less. Also, you need documentation for FTE Safe Harbor 1 and Safe Harbor 2. Like I said, that documentation is not required to be submitted, but it is required to be maintained. So these are the heavy calculations that you don't necessarily need to submit, but you are required to maintain. So let's jump over quickly. MBAF and our loan advisory team, which I'm a member of, we have architected a very nice loan forgiveness application facilitator. The facilitator not only calculates your loan forgiveness amount, it also calculates all the average FTEs, considers the safe harbors, considers the salary, hourly, wage reduction, and it creates a report that you can submit to your lender for loan forgiveness. So let me just transfer over and show you a sample of how it looks. So this entire workbook, this facilitator is formula-driven. We have the loan forgiveness application and the Schedule A that I mentioned. These are the crucial documents that you're going to need to submit to the lender, either via the online portal or by paper. Here's a sample of the PPP loan forgiveness application. Every single amount here mirrors the actual application that I showed you on the slides, and it pulls from each of our tabs that we've done the big heavy lifting calculations for. So we send this to you as a final product, our team, if you're a client at MBAF, and then you use this to submit it to your lender. We also have the Schedule A, and this also does a lot of the heavy lifting from other tabs, and it pulls the amounts. What we do here is we collect all the payroll information. We ask if your employees are owners, if they're not, if they are owners, what type of owners they are. We go through collecting the 2019 wages, as well as considering the retirement and health insurance contributions. And then in this tab, we collect all the data from the covered period that's required. And you can see it's a lot of data on the long form application. We need the data for the first quarter. We also need data for the 24-week covered period. And then we separated it into the different boxes on the forms. And then we calculate all the FTE averages for those 4 different time periods that the loan application requires. This section analyzes the wage reduction, so it automates and answers the questions based on the data that you provide us, and it calculates the salary and wage reduction for each employee. And then it populates it to box 3. And then lastly, we have the workforce reduction, where we consider the safe harbors and the different measurement periods. And then as well, the non-payroll costs. So when this all comes together, we have the 2 pages for the application that we combine and we package for sending to the lender. I'm going to go back to our slides. So MBAS has spent a lot of time creating a beautiful COVID resource center where we have advisories that our team has written and shared with the community. We have our contact information, my information, as well as our other team members. If you have any questions, please feel free to explore the website, hit the contact us page, and let us know if you have any questions or need assistance with your loan forgiveness application. So Marilu, I'm going to hand it back off to you so we can go on the Q&A. I see there are lots of questions.
Okay,
for
great.
us.
Well, thank you so much, Margaret. That was an excellent presentation, and what a great tool, your facilitator, that people can. Do we have a link to that tool perhaps in our chat that we can share with everybody? If you can email it to
I will share a link to our website, and you can contact us, and then we can get in contact with the borrower and help them with it. So let me share that now.
Great. And I just want to, say kudos to Victoria and her team. She just very quickly found some great people to pinch hit for her in this situation. Janelle Hine and Lysandra Silva, you all have been amazing, and you have answered so many of the questions that we have in our Q&A, but we do have a few remaining. And please, if you have any questions, please don't put them in the chat. If you do, hopefully a staff person will find them and drag them to the Q&A, but we really would appreciate it if you would put them in the Q&A section. So there are a few questions, and some of them sound situational. And Maggie, if I could reach out, if you could stay on the line so I can share this with you, because I think some of these sound like a timing issue. The first is from Nadalej Powell, who says that their business is a freight transport company, and they're currently working out of their home. Now, I don't know if that means that they had an office before or not. So they are looking to see if they can have real property forgiven, including the tractor trailer payment and their mortgage interest. So can you talk about the timing of when their office should have been established and the such?
Right. So the look back period for that would be to your Schedule C into 2019. So whatever percentage you used for your home office on your 2019 Schedule C is going to be the same percentage you use for your PPP loan forgiveness application. And I think we still need more guidance on the equipment lease, but actually no, it's personal property. So you can absolutely take the lease payments for the equipment lease that are used in the business, and those are okay non-payroll costs to use for the loan forgiveness application.
And that lease had to be in effect at what date?
The lease had to be in effect before February 15th, 2020.
Okay, all right. Excellent, thank you so much. And we have another question regarding the EIDL advance. Because it's being deducted from the forgiveness amount, she's asking, do the borrowers have to pay back the EIDL advance to their PPP lender? Can you talk a little bit about the benefit of doing that and, you know, the terms that they would experience for the unforgiven amount?
Oh, Janelle, do you want to answer that one?
Yeah, I
So that
can
you
take
guys-
that one.
Right to know.
Okay.
Yeah, hi, how are you? Okay, so the idle advance is deducted from the forgiveness portion of the PPP, correct? Because our borrowers, the idle advance portion of the idle loan, the one that is the funding that comes straight from SBA, is not to be repaid. It's already been forgiven. Then it was also written into the CARES Act that that portion would be taken off of the forgiveness amount. So they do have to pay it back. Currently, if they had their loan approved prior to when the Flexibility Act was passed, which was June 5th, they have a 2-year maturity. Going forward, everything from June 5th to the end of when it sunsets, which is next Tuesday, the maturity is 5 years. Those that had them before the Flexibility Act can actually negotiate with their lender, but the borrower and the lender both have to agree to extend the maturity to the 5 years if they want to.
And the interest rate on that loan is under both.
1% for the PPP and 3.75% for the idle loan.
Okay, excellent, excellent, thank you. Here's the question from Yvonne. If the prorated biweekly amount is $38.50, but the paycheck is $4,500, for forgiveness, we can only claim the $38.50, the prorated amount. Is that correct? I don't know if we need a clarification on that question, or Yvonne, if you hear me, what other information do you need to ask to answer that question?
I mean, you know, the cap on the salary is for the 8 weeks is $15,385 per employee, and for the 24 weeks it's $46,154. So, you know, as long as you don't go above those caps, anything paid and incurred in the covered period should be fine.
Okay. All right. I think a simple question that, you know, including the cell phone as a monthly
Right.
cost of utilities is.
That's okay.
Yeah.
Yes, that's good. That's an okay non-payroll cost.
Okay.
It's an allowable use. Mm-hmm.
All right. Again, this is a timing issue. They moved into their offices April 1st. They have utility costs that they didn't have before.
So, and Janelle, you can agree with me that that's not okay. The obligation and the contract has to be in effect on by February 15th, 2020. Anything after that is not an allowable use and not forgivable.
That is correct. They could, in fact, though, apply for the idle loan. That application is now open, and those utility costs would be covered as a regular monthly expense for the idle loan.
Excellent. Thank you, Janelle. Can you choose to request the idle loan to be converted into a loan so that it does not reduce the forgiveness amount for the PPP?
The idle advance, no, it's basically a grant. It can't be converted into a loan, no.
Okay. And I think we have some, you know, questions again on the leases. Vehicle leases, trucks can be included as expenses.
Right, so if you lease it, those lease payments, if you finance the vehicle, the equipment, you purchased it, the interest on that financing is allowed and forgivable.
Okay. Again, it's subject to the February 15th criteria,
Correct.
right? Okay.
Yes.
And here's one, and I guess they own a restaurant in a plaza that has a monthly maintenance fee under their leasing agreement, paid separately from their rent. Can they use the PPP funds to cover that maintenance agreement, that maintenance fee?
Unfortunately, no. You know, unless that could be considered a utility, so if that maintenance fee includes, you know, electricity or, you know, cable or something utility used for the business, then I would say yes, but that comes to documentation.
Right. We have a good question from Anonymous. They actually submitted their PPP loan request and they didn't apply for what they feel like now that they were entitled to because they perhaps didn't have all the information. Can the initial application be amended to include additional amounts?
I can take that one. So with that program, we have a very small window where there can be any modifications to the loan amount. And that is up until the time that the lender actually reports to SBA that the loan is fully dispersed. And remember, the lender had 10 days with which to disperse that loan money to the borrower. So it may be too late for this if they didn't catch it right away. But yeah, there's just like I said, a very small window when it can actually be modified at all. If the lender wants to modify it, the lender doesn't have to.
Okay, thank you, Janelle. We have a question about office furniture lease payments. Does that qualify under the equipment lease arrangement?
I mean, Janelle, correct me if I'm wrong, but it's personal property as well used in the business. So I would say that yes, it's okay.
Yes, real or personal property, so yes.
They're asking about the business vehicle loan. Is it just the interest portion that is forgivable?
Like I said, if you're financing the business vehicle, then the interest portion. If you're leasing it, then the lease payments.
Excellent, okay.
But they have to remember that with any amortization schedule for a loan, you're paying mostly interest up front. So it would depend on how much that would affect or how much it would be depending on where you're at in the payment schedule.
Right.
Okay. We have project expenses to purchase job materials. How can we separate when applying for forgiveness? Separate these, I'm not sure.
I mean, I think one thing to remember is that this is a paycheck protection program loan. So the funds need to be going to paychecks, to salary and wages, to compensation to employees, and then those other non-payroll costs, which have a very, strong criteria. The mortgage interest, the rents on the lease, and utility payments, nothing outside of that. You can't use the proceeds for these types of things, and you can't get them forgiven. So there's two important criteria there.
Right, and I realize that part of the reason people really want the forgiveness is the tight timeline that they have, that they received their monies before June 5th. So back to the point that Janelle made, they need to probably check out the EIDL loan on the SBA website, because that is open for them as well.
It's still open currently, but it kind of leads into the next question that's in the Q&A.
Sure.
They do have 8-week period if they had their loan approved prior to the Flexibility Act being passed. So anything before June 5th that was approved initially had the 8-week period, but currently they have the ability and the option at their own choice to change over to that 24-week period. So they don't have to feel like the timing is limited, because all loans, it's the borrower's option if they use the 8-week or the 24, but for loans after June 5th, everyone gets the 24 weeks.
Excellent, thank you. Then somebody asked about the timing of rent payments. Since we moved April 1st, what rent payments do we use for the application? The ones before April 1st, the answer.
As long as they were in place by February 15th.
Exactly. Okay.
Right.
Can you apply for the EIDL more than once?
No, it's one idle loan per business, much like the PPP is. However, it's possible to have more than one idle loan extended to a business if there's a separate disaster declaration. Like we had Hurricane Irma in 2017. We opened up not only our physical damage disaster loans, but also idle at that point. So you can have more than one, they just can't be consolidated.
Storage expense, is that considered rent for purposes of forgiveness?
We have taken the position that yes, if the lease agreement was in effect before February 15th, then the storage rent expense is an allowable and forgivable cost, non-payroll cost.
Okay. And we have a question from Anonymous. They were just approved for the PPP, and oh, well, actually they have the PPP. And yesterday were approved for the IDL, and they're a little bit confused how they relate to one another.
Okay, so the EIDL loan is a long-term, low-interest rate loan that's used to improve the working capital position of a business, meaning that they can use those funds to pay their normal monthly business expenses. The PPP, as you've heard from both of the previous speakers, have very limited scope of how you can utilize those funds in order to qualify for the forgiveness portion. So what we want them to know is that they should be using their PPP, if they have that already, predominantly for salary. Salary costs, I mean, you can use 100% of it. The 60-40 split, the 60% is a minimum. So you can use 100% for payroll costs. After you exhaust those funds from the PPP, then you could use any remaining idle money that you have to pay for your salary costs after that. You just don't want to pay salaries for the same employees during the same time frame, because it would be considered a duplication of benefits.
Okay. The 24, okay, switching between the 8 weeks and the 24 weeks, how does that happen? Does it happen automatically, or do they need to contact their bank? And I think I heard before it's
Yeah, they don't have to contact their bank. The bank will know when they submit their forgiveness. If they're gone past the 8 weeks, the assumption will be that they're doing the 24 week. But if they want to let their bank know, they can, but they're not required to.
Mm-hmm. And here's a good question again for you, Janelle. The PPP and the SBA loans are one-time loans, but maybe you might want to address some of the other loan options that the SBA does.
Yeah. Sure, yeah. Yeah, each of those are one-time only, basically. Like I said, you could have a potential for multiple disaster loans, but they'd be specific to the disaster declarations that were in place. So you could have a Hurricane Irma loan and now have a coronavirus loan. But we have other loans in our pantheon of loan programs to assist borrowers no matter what stage they're in, whether they're pre-venture onto existing businesses that need to maybe like look for working capital or expansion funds. We have loans that will finance just about anything under the sun, including changes of ownership, debt refi, everything. So look us up. We've got loans that go from as small as $500. I've seen them up to $5 million.
Okay. And here's one for you, Maggie. Self-employed S Corp owner would their retirement benefits, such as self-employed 401k contribution limits, be covered?
Okay, so this rule is a little confusing. So for self-employed, your max is $15,385 or for the 8-week period, or $20,833 for the 24-week period. That includes, in that max, is your health insurance. What it doesn't include are the retirement contributions, but those are limited based on 2019's retirement contributions prorated for the covered period. Okay, so retirement contributions are not included in the max cash compensation for owners, which includes health insurance. It's separate, but it's capped, meaning you can't stuff your retirement contributions just because they were paid in the covered period. They're limited to 2019's amount prorated for the 8 weeks or the 2.5 months.
Okay. If maybe either one of you can take this, an employee making over 100K and the max forgiveness under the 24 weeks, how does that work?
So employee making over 100,000 is maxed out to 46,154, which is 100,000 divided by 2 times 24 weeks. But for owner employees, it's 100,000 divided by 12 times 2.5.
Okay.
The reason they do that, Janelle?
The reason they did that, to tell you the truth, is to make sure that the PPP loan was used in its truest sense. It is to be paying your employees their salary expenses. And if you read some of the interim final rules, it gives some of the reasoning behind it. They didn't want to create a situation where if the owner chose not to bring people back, and then they inflated their own salary. Again, it's for the employees of that firm more so than for the owner of the firm.
Okay.
Right.
And we have a question about the EIDL. They were denied because, and the reason was that it was determined the business was not affected. However, they did have a decrease in sales. What are the things that the SBA is looking for to determine EIDL adverse?
Impact. Okay, so I have to give a disclaimer. I don't work for the disaster office in our agency,
Okay.
so I can't necessarily tell you exactly every single case of what it is. A decrease in sales is one of the things that they would look at. Inability to meet your obligations. They're looking right now off of just a computer generated algorithm that determines the impact of the business. So that's why they allow a 6-month window for people to ask for reconsideration. What they should provide is just anything that they think is germane to showing the impact that coronavirus has had on their business.
Great. Thank you. Florida unemployment reemployment taxes are covered payroll taxes for purposes of forgiveness?
So correct, they are outside of the 15,385 or 46,154 cap, and they have to be paid and incurred. So the SUTA Florida is an eligible payroll cost that'll go to your forgiveness amount.
Okay, great. Now we're getting hit with a lot more questions. And some of them are just statements. And a lot of them on the EIDL. So
Okay.
It talks about, does only the advance go against the PPP funds when applying for forgiveness, or do both apply on if they received a loan and an advance?
Just the idle advance is the only portion that impacts the forgiveness amount. There was a stipulation that if borrowers received their idle loan prior to April 3rd, which was the beginning date of the PPP, that the idle loan had to be refinanced into the PPP. But not many loans, at least not in Florida, had actually been approved by that point. So it's few and far between that have that, but it's the idle advance amount that impacts, has to be deducted from the forgiveness amount.
And there's some questions regarding nonprofits that are asking about, if we allocate to federal funds salaries, how do we exclude that portion in the application? I guess I'm assuming that they're receiving funds from another federal program, and maybe they're concerned about double dipping.
You cannot double dip.
Okay.
Right. You have to carve those out. Sometimes those grants are a percentage, sometimes they're a dollar amount. You absolutely should not have included them in the loan application. If you did include them in the loan application, you have to give those PPP loan money back. So,
okay.
So in the loan application, they cannot be included.
Okay. And there's a lot of EIDL questions, and I don't want to,
Well, how about this? We actually are holding question and answer sessions on the PPP and the idle loans each day, one at 10 o'clock, one at 2 o'clock today. I'll be on the one at 2 o'clock. And we are having the same webinar that Victoria gave earlier, same presentation every day. And today it's actually at 3 o'clock, but most of the time it's at 1 o'clock hour. So if they don't get their questions answered here, they can come over to ours and ask the questions as well.
Great. Thank you, Janelle. We appreciate that. Here's a question from Anonymous. If the owner of the corporation is the only employee and has 2 subcontracted individuals, is the owner salary considered in the forgiveness?
Right, just the owner's salary, not the subcontractors. You can't include 1099 recipients as payroll costs.
Okay. Great, thank you. Here's one. LLP owners were not included as eligible for the PPP until an interim guidance came out about 6 weeks ago. However, the lender wouldn't approve the owner's salary because of the form had already been submitted to the SBA 10 priors. How can they get eligibility in that scenario? Do we have enough information to answer that question? Are you seeing that question, Janelle or Maggie?
I think
Which one was
it sounds like the partnership got a loan and did not include the partner salary in that loan. So what they have to do is they have to get their own loans. So those LLP partners need to just get their own SBA loans.
Okay, their own PPP loan, right?
Or, I'm sorry, their own PPP loans. Yeah,
Okay.
sorry.
Great, thank you so much. That clears it up. And do you see any other questions that we can address that we haven't?
I saw a question on reporting PPP as income when it does get forgiven. So this is more of an accounting point. Typically, you report it as income when it becomes forgiven. So it's still a liability on your books until it becomes forgiven, and then you report that as income. So for tax purposes, it is not reported as income. So it is, a book to tax adjustment. So that'll happen when forgiveness is granted. So let's say you apply for forgiveness in 2020 and you receive confirmation that the whole loan was forgiven, then in 2020, it will not be taxable. And those expenses that were forgiven are also not deductible.
Okay.
We hear, things going on in Congress saying they want to, overturn that IRS ruling on that, saying that those expenses should be deductible. But right now, the moment that the bank says that the loan has been forgiven, you include that in income for your books, but for tax, it's not income, and it's also not, those expenses are not deductible. So it's a nil effect.
Okay, great. There's another question regarding working from home. And again, it sounds like a timing thing. Since we have to work from home and now turn our home into a home office, they're realtors, can we deduct part of our HOA, FPL, internet, home insurance as a percentage of the loan forgiveness? Can you address the timing of that as well, Maggie?
And Janelle can agree with me, but if on your 2019 return, you took a percentage of, you classified a percentage of your home office as your business office, you use that percentage for the covered period. If last year you didn't use your home office at all and you didn't put it on your, Schedule C, a percentage, then for the covered period, you cannot do it. Janelle, do you agree?
I agree, correct.
Okay.
Deadlines for applying for loan forgiveness.
The loan forgiveness is going to be kind of different deadline for each person, each business, because everyone's got a different covered period. And now that they've got the option to extend between 8 weeks and 24 weeks, we don't necessarily want them to have to wait until the end of the 24 weeks to make their application for forgiveness. As soon as they have expended their PPP funds, they can initiate that. But the larger problem for that is that they have to wait to have all the documentation. And if they're waiting on quarterly 941s, the forgiveness, their covered period may not end and actually collate with that quarterly process. So it may take a little bit of time for them to do that. But overall, if they don't ask for forgiveness, I know no one's asked about the deferment period, but when we initially started the program, we had a 6-month deferment for payments on this. Now the deferment's actually tied to when the forgiveness amount is paid by SBA to the lender, or if they choose not to take any forgiveness, it's 10 months after the end of their covered period. So a little bit different now.
Okay, great. And we are running out of time. Are there any other questions, Elizabeth, that you would like for me to point out? I think we've covered most of them. And if we haven't, Janelle has shared with us that, you know, the SBA has regular webinars and welcomes, you know, not only questions about PPP loan forgiveness, but also all the other products that they have. So,
Hi,
oops.
Hi, Mary Lou.
Yes.
Sorry about that. Sorry about the audio hiccup there. There are some folks who are asking where they can access that SBA webinar today for 1 p.m.
Okay.
Okay, so I believe that they were promoted on Eventbrite, but I don't have the link with me, but I can send it over to you afterwards.
Excellent. Excellent.
And we're going to have them next week as well. It's not like we're only doing this one shot type thing. This is going to be our regular scheduled thing until people get through the forgiveness part of it.
Well, listen, first of all, this has been super informative. We are so grateful to the SBA, your whole team, Victoria, Janelle, Lysandra. Thank you all so much. You have been super responsive. And Maggie, thank you all for just giving like a deep dive into these issues. These are very complex. You guys have made it simple to understand. I also want to, you know, just acknowledge again that facilitator is called the facilitator worksheet that you all have. Yes, yeah. I think that's a great tool, a great resource for people. And obviously there's a continuing seminar. So thank you both for an excellent, excellent presentation. It's super valuable to our members and our community. And thank you for all the work that you do.
Thank you.
So,
thank you so much for having me.
Okay. We appreciate everybody being on the webinar here today. As Tanya mentioned, we are going to have a link to this webinar on our website, Greater Miami, MiamiChamber.com. And just note, and the SBA is very, very cautious about this, that, you know, some of this might be dated information because things are getting clarified on a continuous basis. So yes, use it as a resource, but also always go to the original source, okay? Thank you all very much. Have a wonderful weekend. Bye-bye.
Thank you.
Thank you.